Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 44th COT report of this year. And as usual, we're going to start off with the changes in commercials positions. Here we go. You can see we've got Fed funds on top with a 25% change. Let's open that chart first. And as you can see, we've got a 31% change in large speculators positions, an even larger one. And yes, definitely the change sizes are larger than average. Here we had one that was a bit even larger and actually could move prices a bit higher. Question is whether here we will see the same thing in the opposite direction. The change size would push prices into even lower territories. Let's move on and have a look at cotton. We had cotton on top concerning the change size in commercials positions for the last few weeks. You can see that we had a pretty hectic move in the past month. Basically, this time we have a change in the opposite direction than the last 2 weeks. Commercials decreasing their net short levels to roughly 8,000 contracts. And large speculators are barely above the zero line in a bit net long territory. So it's interesting to see actually that only small speculators are taking the long side of the market, which in its own could be considered a bearish signal. So of course, we're always talking about cotton and looking at the 10-year chart. And on the 10-year chart, it's pretty visible that whenever commercials were net long and started to decrease their positions and going into short territories, that coincided with the prices going higher. Just here before this huge rally, that's exactly what we could witness. So wouldn't be surprised if that happened in the medium to long term. Of course, the question is whether we're going to be seeing this happen in the near term. The near-term signals, the COT changes, though, the last 2 weeks we're pushing prices lower. So it's really a question of timing. But the general long-term picture here is still, I believe, bullish. Let's move on to copper, where we had a 20% change and also 31% change in large speculators, an even larger one there. You can see that it's a larger than average change size, although we could witness even larger changes here. What's interesting to see is small speculators just turned a net long. So that's interesting. But let's open first the 5-year chart. Maybe then we're going to look into the 10-year chart later and see how extreme the market is. Well, if we open this chart, you can see we're not at that really extreme level for neither participants, but you should always analyze other metal markets if you're going to go into a copper trade. We've been analyzing platinum for the past couple of weeks, and we've checked gold and silver a few times. In general picture on all these markets, we're pretty bearish, and now we can see prices declining. So even if you consider this 20% change a buy signal in copper, just be careful, because these metals do correlate with each other, and other markets declining suggest copper to decline a bit as well. Let's move on to large speculators COT extreme and have a look at that. We've got natural gas on top with a 277 report extreme. So that's a pretty large extreme. Let's open right away the 10-year, or sorry, first the 5-year chart. Let's just open the 10-year chart right away. Here we go. And you can see that since, I believe, 2007, we haven't seen such levels in commercials position on natural gas. So really the extreme is getting higher and higher. We've still got space left, though, so wouldn't be surprised if for another few more months we can see that trend continue and find prices reaching higher levels still. Again, timing is the biggest question. Small speculators, though, are more or less in an extreme territory. It's up to you to decide. If you look at a short-term trend line over here, maybe taking a short opportunity could be a good risk-reward trade, and we can see prices declining again. But that's all speculation. The general picture, what the COT report tells us, is we're not at extreme levels, but we haven't seen these levels for quite a long time now. Let's move on to COT extreme and small speculators and have a look at our last market that we have time for. It's the Japanese yen. We've talked about the Japanese yen last week, because since we had that huge change there, more than 20% change, which is really large in currencies. And we talked about this market on the 5-year chart, and I was showing you how dynamic movements and reaching extremes at the end of these movements coincide with a bottom in prices. It's exactly what happened over here and here, and we're seeing such levels right now, and especially in small speculators where we have that all-time extreme at the moment. So generally speaking, we would be expecting prices to go higher from here, and that might be the best trade now. I think that's going to be all for this week. We don't have time for any more markets, but you can go and check out other charts at our COT charts page, or if you would like to have a more in-depth analysis and add other great functions to our table, you can do so at our subscription service. You can look at other COT report types, CIT, TIF, disaggregated new types of reports that the CFTC publishes, or just check out other data types maybe. So a lot of great functions to reach at our webpage. So thanks very much for being with me this week. I hope you enjoyed this report, and I hope to see you next week. So take care. Bye-bye.